Hello, everyone. Happy Tuesday morning. How is everyone doing? Good morning, Donald. Good morning, Patrick. Good morning, Jacob. Good morning to lots of people in the background. No, not a lot of people in the chat. Well, everyone, hope you have a great trading day. We got Fed Logan speech coming up. They did not have the Red Book numbers posted yet. I mean, it's a minor thing, but if somebody has those, could you put it in the chat, please? We got Logan coming up at 8. We got S&P Global Services Composite Manufacturing at 8:45. Those are the small to medium-sized companies. We got Richmond Fed Manufacturing and Services, a minor regional index, and that's about it. But everybody's going to be focused on the debt ceiling today. The debt ceiling talks. Is that going to progress and get done and take that off of the market's mind? So S&P 500 maps sort of mixed it down. Besides Avgo, Broadcom is up pretty big today, and energy is up today. Everything else a slight pullback. Energy leading, and then financials, but everything else is negative. Everything else is negative. We're getting that pullback. We have those minor double top patterns. This is interesting. Hey, Sterling, thanks for tuning in. This is interesting. A slight little bump up in a possible rate hike, but still 74% for the cut. But probabilities, looking at the future probabilities, we're still in pause mode. And remember, we had November and December both being cuts. December is no longer a cut. So as Bob's talked about multiple times, that as things get closer, it's sort of like, okay, the market sort of starts believing the Fed is not going to start cutting rapidly, and it's going to take some time, but things are minorly coming in line. Fear and greed still solidly in the upper end of greed mode. Another little chart today. Percent of stocks outperforming the index. Here's where we sit now, 29. This was done by Jeffries and FactSet for the sources. I forgot who exactly put this out, but here was 98.99 before the huge bubble burst. And we are back. Now, not saying that's going to happen. It's just an interesting little tidbit that this is the lowest percentage of stocks outperforming the index on the S&P 500 since party like it's 1999. Interesting little thing there. This morning, what else do we have? Well, hold on. What else do we have? There we go. Gamma, we still have the gamma levels right at lots of call gamma at this 4,200. That is providing to be a pretty key level. And now the gamma flip is up to 4,221. So if it sits around this 4,200 level or slightly lower, right now, let's see where we are trading. We are trading 41.92. So we're below that 4,200, and we're technically in negative gamma right now. In terms of earnings, Lowe's was down. Everything was down. AutoZone was down pretty big. But BJ's was down. They had a miss. Dick's was a beat, but they were still slightly down. But Lowe's was down and AutoZone were down pretty hefty. After the close, our wonderful close to 2,500 PE, Palo Alto and Intuit and Allegiant are the big ones. That's where we sit with that. Let's see who else is tuned in. Gold seems dead. The debt ceiling drama. Why is gold's not dead? There's a wonderful. I have gold. Look, pep up, pep. Gold trading against a pretty significant level with a potential double bottom against the rotation zone, so lower probability, and it's not near triggering yet. But for the gold bulls, that triggers. You could start a bounce, and if it got back up into this congestion, that would be the one that I consider rolling forward off this little short-term bottoming pattern. Look, you got a little potential. That doesn't mean it has to happen, but you get a close above 1987.40. There you go, Pep. Silver. Let's just start with the metals today because I just have them up here. Look, silver, second target hit. Second target hit. Is this a big bottom? No. It's just trying to bounce back a little, but against the rotation zone, so we could see another rollover play. Could be setting up for a little divergences. Cycles still have a little room to run, so it's fighting the cycle trend, but we've already hit first and second targets with silver. By the way, if it does break below this 2282.5, I'm watching. We could still quick trip it to the 200 on the daily. Copper, I said I was watching for the breakdown from the diamond pattern, which we are clearly getting today. So next key support is about 355. Now let's get to the broad markets. We still have the double. You can even see the double top pattern on the daily, but completely valid on the 4 hour. This didn't invalidate it last night. Little sloppy in there, but it's still 4186.50. You need a close below at least on a 4 hour time frame. 4168.50, 4159, 4150. So is that a huge topping pattern? No. But it is a minor topping pattern, which would, and I'm focused mostly on the first and second targets. Okay, first and second targets to there. So that's what I'm watching. Now, if it rotates up one more, if it holds this level, if it holds right around this 41.89, 41.90, you know, especially on a closing basis, no, like at least a 1 hour closing basis, we start getting, we do have somewhat of a multi-stage clear path in here. On the 4 hour, you can see the stop points on the 1 hour, but if we rotate back up to this 42.20 area, where the double's off the table. That's the only potential bearish thing I have right now. Now on any rallies, at least off the open, key little areas are about 41.98 to 4200. It's really got to get some traction of about 4203. With some positive internals to get into more of a bullish mode. But remember, if you get debt ceiling headlines and the debt ceiling's done, it could get a snap rally. Hey, Options 22. Good morning, Anissa. My man. DXY 4 out. Let's just, yep. See, I already got it. It's also a daily. My man's got it. My man, already have it on the chart. 102.55, a close below that. Pullback levels 102.22, 102.06, 101.90, which takes us to this little base right there. What does that look like on the daily? I'd be focusing on the first and second targets. The second target especially because you got the bottom of the rotation zone in that. It has not triggered yet. It doesn't have to trigger. So far, we're still dealing with a sideways correction. On a breakout play, I've also put the harmonics on here from the low on Friday, April 14th to this pausing bar. See, we got pausing bar, which gives me a cluster at the 62.5, 103.56. Very key level on a breakout. Now, if you're trying to intraday trade this, I'd use these little reverse harmonics, especially to raise stops. But on a breakout play, that's the major target. Why you close above that on the daily, we're then shifting to even higher price action. And look, in terms of the major level, if this does continue to rally up, because we are on the other side of the rotation zone, we're right against the weekly 50. But remember, the daily 200's up here, right in front of the potential double bottom trigger on the weekly. So that's going to be a key magnet point should it keep rallying. The only negative right now is that potential double top, but it has not triggered yet. NASDAQ. We also have the double. Needs at least a 4 hour close below 13,794.25, 13,716, 13,680, 13,641 are the targets against the rotation zone. So one of the lower probabilities, and the rotation zone is right at that first target area. All right, to the upside, trading right at a little minor support right now. if we get anything off of this, we don't have a shorter term bottoming pattern yet. We just have some waning momentum against this. But if it can start getting some traction above 13,875 with some key internals and then can push through 13,895, it would be a snapback. Then I'd start watching on the triple top territory. The Dow, which didn't have any pattern, but we're already still relying on the bigger double top that was triggered and has been in a sideways move. Still really focused on 32,875, where the 200 is in the first target. 32,877 to be exact. Russell. We're still good on the potential double top. This has a choppy little clear path move on the 4 hour, but if it keeps the breakdown zone, 1786 and then 1781 are the downside targets well before that double does trigger. Keep in mind only the first and second targets are really major valid ones. And it's what would be interesting if it did collapse down here, the rotation zone would be out of the way. So I'd be watching, though, for this 1780 as the first key support. On a rotation back up, really has to get back above about 1803, and then I can see a retest of yesterday's highs pretty easily. VIX, interesting. We are up a bit today, but still keeping an eye. If we do start really moving above 1834 with other negative internals like a negative tick, pushing below 1,000, then I'll start watching, really pressing to the downside. The daily, although the one-day VIX is, again, that's slightly delayed data. But it's still not near a breakout level. The 1530 is key for that. DAX, on a continued drop, it's still above its breakout zone. First little target is a 16,150 and then 16,065. Only starts getting into negative rollover potential below 16K. Notes, pausing right here. By the way, the double is now pretty much off the table. It's trading against a harmonic, but is there any key bullish pattern? No. Any rally back into resistance and against the 4 hour rotation zone. So nothing to the bullish side, because I'd be watching on any pop up for another rollover play there. We already looked at that. Crude is just still a mess, although chopping away on the flattening out rotation zone. So if we get some intraday momentum, 73.75 is the first target. Then 74.45 is the next target with the 50. And then if we break above there, it could get interesting, and we could see a pretty quick run to close to 77. We already looked at the metals. Let's jump over let's just take a look at the yen. This is getting a little messier, but still a valid potential double top that we covered yesterday. The euro, and we'll get to spiders and the Qs. The euro has a little potential double bottom against the rotation zone, so one of the lower probability varieties, but is something to watch for on a close above 1083. Pound, that's just a mess right there. I'm just leaving the pound alone. Bitcoin, a little rally, trying to break out above 27.4. If it breaks above 27.4, I'll just look for 28,000, 28,100. This is just, Bitcoin's been a mess. Tesla, slight gap down. Let's just see. I want to see. It's not stop reduction yet, but I want to see where we're trading in the harmonic levels. The key level to watch for is 193.17 if it does rally. Other than that, gap fill today. Support now coming back at 179. Now let's get to the spiders and the Qs. Spiders, remember, you still have the potential double top, it needs a 4-hour or, yeah, 4-hour close below 417.35 or really weak internals and a breakdown. Right now we're trading pre-market right below that, but I would not watch for a 5-minute close below this or anything else. That with the targets 416 roughly, 415 and 414.30. So that is still in place. It's trading just below this key resistance shelf. So on any rally, resistance would be 417.80 to 418, and then I'd watch for that gap fill if it does just bounce back or we get some positive movements on debt ceiling. 418.78. Then you got 419.60 and then 420.63 and 421. Duck Hughes, which is a very, very small pattern right here. Needs a 4-hour close below 335.43. Much lower probability on this one. 344.05, 333.35, 332.66. Those are the levels, though, that can be utilized to the downside. To the upside would be for the gap fill, 337.65. Then you have pretty significant resistance around 338.54. Then we go off 339.08. So, and then above there, you don't have much until upwards this mid 344s to 345 area. Hey Jacob, hey Christoph. Thanks. Red Book 1.5, so it's still contracting. Good morning, Richard. I start late and put you on 1.25 speed and you sound great. Fantastic. I'm still good. SQQQ Ken, welcome. Thank you for tuning in. SQQQ. Again, I'd be watching for... This would not be the one I want to short right away. It would eventually, well, this will be a good one to go long at some point. You do have your minor, very minor double. But it's still, see, it's not even there. Let me just look. Nope, it doesn't even count. So, this is... Boy, this is not something I'd be looking at just yet. But if you need to look at playing this to the upside, because we only have a minor topping patterns, you're really looking above about 26. Now, if you're looking really short term, you'd be looking for a break above about 25.45 area with negative internals. And the major target, if it did get a couple days sell-off, would be 26.71. Unless we get super momentum, then I'd look for about 27.95. The market recovery is fake. Well, people would cite yesterday with the Russell, but the Russell's really not recovering. It's still in consolidation and congestion mode. And you can't call it fake. It just doesn't have the small cap supporting it. And yes, generally you get some small caps bottoming and more of a recovery pattern from the small caps. But I still wouldn't call it fake. I'd just call the market probably irrational. George is hoping it's to see until rationality returns. It doesn't have to. But I know if we get a debt ceiling deal, even if we get the pop off that and they start, because they're going to have to issue a bunch of treasuries, that's going to drain liquidity going into, that has been going into stocks, is going to go back into treasuries, and you watch. You want to know if it has a sloppy 1 hour? Yeah. That you can use the advanced sort of horizontal neckline. It's at 1800. So if you want to use that, you're looking, if you want something before that, you're looking at, it's almost that first target. 1794, 1791, 1788. And that's into this it's not even a great clear path move because you got all that volatility from the fake explosion thing yesterday coming in here. But yeah, I definitely consider using those levels to the downside sterling. Yeah, see, last three double tops in the market only, again, that's why I'm saying these are minor topping patterns and they're against the rotation zones. So, we need some really key internals. We're fighting a very strong market still. So, that's really where I'm looking. All right, into the open on the S&P. Oh, we'll just be watching this 15-minute rotation zone. We got some severe waning momentum against the potential trigger point of that double. Got some severe waning momentum, so I'd be watching more for a bounce potentially and then a roll over. I'll be keeping an eye on this 15-minute rotation zone and after about the first 5 minutes, the tick. Hey, John. I didn't see. When's Powell going to speak and what's he speaking at? I did not see that. I'll have to double check that. All right, everybody double check in case there is Powell speaking, but I did not see that on my radar screen. If it's happened, sorry, I missed it. If it's happening, sorry, I missed it. With that, I will see everybody after the close. Have a wonderful trading day. Bye for now.